better if I get a mineral water bottle?
Uh,
This one or bottle or water bottle?
let's
This one.
put some water out tea.
Tea.
Hello, hello. Hello, hello. Hello, hello.
Should the laptop be here or is it okay here?
Face to here. Sit there.
Should the laptop be here or?
More this side.
No, the laptop.
Yeah. Like this. Wait.
Where can they see?
Oh,
Okay, as long as they don't see the screen.
yes.
Do I play with this or?
I don't know. I use this. You just look this. Look this. It's okay.
Okay.
Come put here. Put here. It's okay.
This one.
Very good. Very good. You try to say something. I heard in that room.
Okay. Okay. We testing the stream. Testing if people can hear me. today's topic is something that one of the things that I consider fundamentals of trading, and it sets you up for whatever plan that you have for the long term, or even in the midterm. You can shift strategies. So depending on your lifestyle, your goals, whatever you want out of the trade, out of trading, you get to choose. What's this? Ah, remove all distractions. So Fed officials left their benchmark lending rate unchanged last month in a range of 5.5%. Collins, who does not vote in rate decisions this year, said she expects policymakers. Yeah,
Later,
you hear?
yeah, very good.
Okay.
Later, you can see someone text you, ask you a question here.
Okay. I
You
can.
just reply. Okay.
Alright. How do I?
You just see here.
Okay. How do I set up?
No, you set up. I already set up finish. Okay. How do you think forex trading?
It's something that you have to get used to. It's something that you have to be familiar with. Hopefully, you don't get into the hype. But if you are able to understand it, it gives you an avenue for making more money.
Huh?
afternoon. We are live. We are looking at we'll be waiting for a few other members for a bit. So relax. Um, Today we'll be discussing a little bit about choosing the time frame. So hope everyone had a good few days of trading. I'm just watching the market for now. Usually around 3 p.m. in the Philippines, the Europe market opens up. So, and sometimes the market waits for a while before it starts moving. So right now we see that I'm looking at the Euro USD market. Currently watching it, especially with the US dollar showing some CPI data later. So if you look at Euro USD in comparison to the JPY, so yen has been ranging, so just going up and down while the euro has been going up against the dollar. So, oh hello, Tao, hi. Good afternoon. Hope you're having a good weekend. I mean, good week. Are excited for the weekend. Uh, let's give the other people a couple more minutes before we start. And so, anyway, the discussion for today isn't that big of wait, how do I explain this? It's very fundamental. It's more of how you plan on bringing it to yourself, and how do you adjust yourself to the goal of becoming a trader. Because what we want over here is, or what we want to promote is the lifestyle of becoming a trader. So it doesn't matter. We don't want to hype people up. We don't want to hear people just making money one time and then not trading again. We want to give you various ideas on. Oh, hello, Robin. So we'll be discussing a lot of why people choose a short-term ideas, why do people choose long, medium term, or why people choose longer term trading, what are the advantages, disadvantages, what factors you can look into, why you would choose such a thing, and why maybe some risk management ideas depending on the discussion, and creating a strategy that would probably be best for everyone or each individually. So no movement. There was a movement of about how many pips in the market. So from 3 p.m. to 4 p.m., that's about 150 pips. So if you are one of those short-term or day traders, you could have taken advantage of that already. Anyway, I think that's enough time that we've given everyone to catch up. So let's get them ahead. So right now we'll be discussing what are the time frames for trading. If for those who have their for those who have their MT4 platform up already, feel free to look at your MT4 platform. If not, I can just discuss it with you, maybe show you a few things. Time frames changes the way you strategize or the way you think. So for example, this is the Euro USD in the 1 hour time frame. But if you look at it from this is the minute time frame, the 5 minute time frame, the 30 minutes, and you can adjust it to daily, and then weekly, and then monthly. Not so much. I won't discuss not so monthly time frame because very rarely do people use it. So my personal way of doing things is I prefer the 1 hour time frame. That's my usual because I usually prefer doing day trading, and luckily I'm allowed to do day trading. So why would you choose, for example, a shorter time frame? Those are for people who would be into scalping. Um, if you're not familiar with the term scalping, it's when you get into a trade and you only take a few minutes, like 2 minutes, 3 minutes, or sometimes even just seconds, you move out of the market already. Now, it's a lot more risky, a lot more volatile, so you might need a bigger margin for using to do this. But for those who prefer high action because the market allows such opportunities, this gives you more action into trading with the market. So for those who has the margins or for those who have the the capacity to handle high volume and high liquidity movements in a span of few seconds or a couple of minutes, scalping might be a strategy that you might want to get into. Now, aside from scalping, usually when you do scalping, you look at a minute, 5 minutes, 15, and maximum of an hour if you're gonna look at scalping as one of your strategy. So another strategy that you want to get into is day trading. So like I mentioned, day trading is when you allot a set amount of hours in a day that you want to get into, that you want to trade, and you want to look at the market. Me personally, I prefer this type of trading because short-term trading might be scalping. I do not like the volatility, or I do not like getting into the market and then just getting out. I prefer to see get to feel how the market goes first. So day trading allows you to do that. So the basic idea is day trading is you set a lot, you set a day, usually a few working hours, maybe the same 8 hours a day. This is for those who wants to do CFDs as their main source of income. So they allot about 8 hours in a day, and usually they get into sometime within that day, and then before the day ends, they get out of a trade. This is advantageous because you won't have to worry about any open positions when you look at the market during the night. It lets you sleep better because you don't have to worry about any open positions in the market. You just have to make sure that you are prepared and you know the news that came out during that time, and then the next day you also continue with a strategy beforehand. Now the next one is swing trading. Oh, for day trading, you usually look at anywhere between 15 minutes to the daily chart, depending on your strategy. For but usually you're around the 1 hour to H4 uh, candlesticks, the time frames. Next possible strategy for you would probably be swing trading. All right, swing trading is when you focus on medium to long term. Sometimes it takes you a few days before getting out of a market, or sometimes it takes you a week to get out of the market. Um, this this one, it allows you to have a little bit more leeway and have a little bit more. It's a mix between having the long term or an investor mindset and compared to the day trader mindset where you always have to focus. This is highly recommended for people who have a 9 to 5 job and you only are allowed to trade like a couple of hours in a day. Um, you can do uh, swing trading as part of your style of doing trading in the market. So that's probably one of the beauty or the advantage of being in the CFD or on the forex market. It allows you to be in the market whenever you want, as long as it's in the weekday, of course. So um, so you get to structure. So for the night owls, you are allowed to trade. For those who are morning people, you have still a lot to trade. Now, depending on what time zone you are in and what day you are in, you can you'll be able to get a lot of volatility from the market, or a lot or not a lot of volatility, but it will depend on the market time that you are waking up. So just make sure that sometimes, even if you are not available for the big swing trades, just make sure that you have proper risk management, like you position your stop loss and you position your take profit, and try as much when you have open positions, try as much that you forget about them at night. So I would not recommend putting a high lot position before you go to sleep. You want your positions to be minimal impact on your daily life, because we want you to be able to continue living your life and just trading, continue on the side, make money on the side while trading, and then going on with your daily life. Right. Question so far. Hello. Wait, let's look at this. Gold will group at 1900. I believe. Yes, gold has been running up, Mr. Tony. Gold has been running up right now and is very strong. It's something we can discuss later, but it's not the topic. But yes, very much. The gold has been chosen as the better safe haven right now against the dollar. And um, scalping and swing. Okay, scalping is more about is a quicker trade. So scalping is about 2 minutes, 3 minutes into the 2 minutes. You get in and then you get out of the market. The risk about scalping is whenever you get into the market, you always lose the spread. So you scalping might not be the best strategy if you're not familiar or if you're not ready for the market. And there are certain hours in a given day where the market is the most volatile. So usually you want to get into where the best time is when the Euro market and the US market both open. Usually for about Hong Kong time, it's between 8 p.m. to 12 midnight for Hong Kong time. That's when the market, the both Euro and the US market are both open. I hope I can hope that helps for that information. Right. Another strategy, aside from, like I said, swing trading, is a bit medium term. There are those who really, really, really want to get into the market but don't want to focus on the market, or they just want to say that they are part of the market. Or maybe they don't like the ETFs or any, or bonds are too slow for them as a means of investment, so they position themselves in the CFD market. So with that, we call them position traders. So these traders look at the trade from a long-term point of view, like days, weeks, potentially even months. So these traders have sometimes as a huge margin. They put a one trade in. That one trade will last them a few months, and they just enjoy the time, let the market go up and down, and then just exit once they gotten out of the market after a few months. This type of trading, um, honestly, if you're new, this is something I would highly recommend trying out because it allows you to feel the difference between actually trading in the market compared to, for example, casino. People like in the stock market or the CFD market or whatever financial market to casinos. If you do a position like a position trading strategy, you will see the difference that you can control the risk management with CFD trading compared to other markets. So also for position trading, if you're like if you're the type of person who reads the news every day, who likes to, let's say you see that, for example, there's a war in Israel and Gaza, you want to position yourself to take advantage of that. So you can put in going into the gold, going to the dollar, moving away from the gold, moving away from the dollar. You can position yourself and see how that news goes along, and then position yourself on where the market goes. All right. Now we'll be discussing why would you choose. Hold up. Looking at the market again. Why would you choose one market over the other? Like I said, it depends on your lifestyle. So, for example, if you're the type of person who has time or who wants to focus on trading as your main source of income, you can do something. You want to shift more on the short end or the shorter end of the time frames between I mean 1 minute, 5 minutes, 15, 30, 1 hour. So you want to focus on those. If you are more into being into the market for a short amount of time, you just want to see or you just want to feel that you are into the market and trading in the financial markets, you might want to look at a longer term strategy or longer term time frames. So what we want to emphasize again as we discuss these things is we want to make sure that you want to trade, you want to make the market adjust to your lifestyle because the market will always be there. And never, ever feel that you have to get into every single opportunity in the market because there will always be another opportunity, there will always be another. I mean, just weekly there's news, weekly there's new data, weekly there's opportunities in in the CFD market. So make sure that never feel bad if you were not able to take advantage of getting to the market of such an occasion. Just make sure that you are always ready. And also, if you're not sure about any single trade that you have, just wait. Just keep wait until you're a lot more confident about a single trade that you want. So for those who are into shorter time frames, let me give you an example of what will it look like. So this is, for example, a 5 minute, what do you call this? 5 minute 5 minute time frame for the euro. As you can see, it's, if you look very closely, or for those who have an MT4 with them, if you look very closely, movement is a lot. It goes a lot of movement within up and down, and candlesticks are shorter in comparison to the bigger candlesticks, because right now, since the euro market already opened, there's a lot more traders, a lot more trading happening, a lot more movement in the market. Now, if you look at, even if you look at the 1 minute mark, so if you look at the 1 minute mark, even 1 minute candlesticks are very significant. So that's why if you're going for a scalping strategy, uh, this might be enough. But like I said, if you're going for a scalping strategy, you have to know when the market is most volatile, because you don't want to get into early in the market where only the Japanese market is open and you don't know what, there's not a lot of volatility in the market. So knowing the timing of when markets are open, when are the windows that two markets are open, those are the best time if you are going to focus on a scalping strategy. See, look at this. The euro just shut up again. Right. And hope everyone's learning a few things. These are things that I studied. It was taught to me. It took me a while to get into the habit. I tried to condense as much information as I can, and hopefully you guys, the beauty about these things is, even if you just get one idea, that sometimes that one idea can give you a lot of profit already. Sometimes just one strategy and you just continue doing it and doing it again, you'll make a lot of money. So just try to listen to anything, try to apply what you think applies to you, and if it doesn't apply to you, just throw it away. You can re-strategize another time. Take care of your money. All right. Now we're going into intermediate or medium term. So for those who focus on or would like day trading strategy, you might want to analyze more of an H1, H4, or maybe a daily chart or daily time frame, because this allows you to have both uh, the excitement of of being in the market on a daily basis, but it also gives you enough leeway for movements in the market. Now, this requires um, a little bit more patience and a little bit more. Uh, Actually, this is a really good. Excuse me. This is a really good practice for those who are uh, planning to get into the trading as a personal daily, is an income replacement or as a job replacement. This is a good strategy to get into, or a good practice to get into. So you want to focus more on this type of trade if you want to get into really just focus on trading. Now, with these type of movement, you might want to focus more on a few days before exiting a position, or whenever you put in a position, you might not look at into just a few hundred pips. You might look at 500, 800, more bigger. It's a bigger scale of a trade for this type of strategies. And one of the things that also my mentor taught me, and I remember were during the first time that he forced me to do this, for for the intermediate time frame for a medium term strategy, he told me to put in a position and do not exit that position until a week has passed. So if for those who are just starting out, that might be something or that might be a practice that you might want to look into. Um, it shows you that the market will just go up and down, and sometimes you can see that you're losing on a trade, but you keep it, and then the market goes back up. Or sometimes you see that you're winning a lot, but then the market goes back down. So you'll feel both ends of the spectrum, and one of the things that you want to experience as a trader is tolerating what's happening with every open position that you have. That is an important skill that you have to develop, and you have to keep doing and keep going through so that you can be comfortable with any of your open positions in the market. All right, you have a question, Mr. Mohammed. Can I start forex with $100? Yes, you can. It depends on the broker. Some brokers allow $100 as a training point. Just make sure that when you start getting into trading, you start with micro lots first. That may be a topic for another time, or I hope feel free to research what are lottage. Basically, that's the amount of, I guess you can call it, bets you want to put in the market. $100 isn't a lot, so you might need a lot of leverage to use that. So, but yes, you can do it. Technically, you can. We are. Alright. We can now talk about longer trades. This one, to be honest, I've never gotten into. I've longer trades for me are a bit boring, and I kind of one of those guys who enjoys the excitement, seeing the movement of the market, seeing how your money is doing, seeing if you made the right choice, if you made the right decision or not. But for those who only have a limited time with their life, and they can only give so much attention to the market, but they really want to be in the market, or they want to feel that they're also invested with a particular commodity or with a particular currency. I can see the longer time frames like a daily, weekly, um, even monthly, maybe, because at the end of the day, if you put your money in, for example, if you put your money in a stock market, or even in an ETF, or probably, or an, I don't know, a mutual fund, it won't move as much if you put it in the CFD market. The and and since the CFD market is also 24/5 for retail traders. Since it's 24/5 for retail traders, it allows you to it allows you to be more excited about how you can see, for example, you don't look at your trade for a week, and then you see that after a week, when you look at it, you made a lot of money. And sometimes I've seen, and again, depending on what happens with the currency, depending on what happens with economic data, sometimes you can make 50, 100%, 200% in a span of a week. There are opportunities like that in the CFD market, but um, it's not something I'm gonna promise everyone. It's still, sometimes that's the gambling part that you don't want to get into when it comes to trading. So it's not a recommended thing, but it's better than not being in the market at all. So with longer time frames, you want to be a lot more patient with how with your trades. So like I mentioned earlier, with the swing trading, usually for those who are new to the market, 1 week is a very, very long time to be in the market. And then just looking at your money, you lose money, you make money going up and down. But this one will it takes the same idea, but you have to really, in, really be invested on the long term. I'll show you for as an example. Uh, Here's the 1 hour of the Euro USD. But if we set it up on a daily basis, this is its daily chart. So if you can see it, since when was this? July, euro against the dollar has been on a downtrend for how many months? July, August, September, October. For 3 months already. So you might want to have a really long, uh, have really long patience, really wide patience, and also make sure that your margins can handle such a huge trade, because I can see people, for example, putting a buy position in the market, shifting against them, and sometimes holding that position or tolerating the position might not be the best strategy for you. So uh, again, it depends on your plans, depends on your strategies, it depends on uh, what you want. However, being in a long-term position or a long-term trade like this one, uh, it's nice to see sometimes that you are trading with the currency or trading with an economy of a country. So I can see people like, for example, you're really invested in the yen, and then you put in a position. I can see you just reading fundamental news every single day, or once a week you read fundamental news and see how the yen is going, and it again, it kind of feels like you're betting. It has the same feel as gambling, so I can see how people get excited sometimes. But in terms of betting, you're betting with a country. You're betting that the country is gonna do better. The currency of that country is gonna do better, and compared to the currency of the other country that it's paired against, which is usually the U.S. dollar. So make sure if you're gonna position yourself on a longer time frame. Um, Capital requirement. Sorry, Mr. Muhammad, $100 will not suffice for such a for if you're gonna plan on doing a long term or a really long trade. I mean a long term strategy. Mr. Tony and Bison Gold. 100 is better than, yeah. Yeah, exactly the same idea as Mr. Tony over here. $100 may not be. It's not recommended. I would rather suggest a minimum of 1,000 if you really want to, But if you want to experience trading, just getting into it, $100 is uh, it's a great learning experience. You'll be surprised how quick $100 happens in the CFD market. All right. Yeah. So currently we are. All right. So Mr. Tony is asking about gold. Mr. Tony is really interested with gold. So the interest in gold right now is high due to the volatility of the market with regards to Israel and Gaza. Um, it seems that everyone's shifting towards gold. So for the short term, it's a strong buy, but the indicators are showing that there's a lot of markers that it might be on the overbought. Uh, as for technical chartings, is already on the overbought side, but based on fundamentals, it could still go up. So we'll see how it goes. Again, we'll discuss this later, but later tonight for Philippine Hong Kong time, there's gonna be information with U.S. the U.S. with regards to their CPI. So we are expecting another huge movement, especially for the dollar later, which will affect uh, all of the other currencies. All right. Now, let me ask you. Consider, imagine you were in a position that you have, um, let's say I gave every single one of you guys $100,000. Let's just say, and I don't give it to you in cash. I create each and every one of you an trading account, $100,000. Given your same and you're not allowed to withdraw it, okay? You're not allowed to withdraw that money. Given your same lifestyle, what would you think is the best trading time frame or best trading strategy for you guys right now? So um, again, on my recommendation will be dependent or on your how do you feel about the market, on how long do you want to stay in the market. It will depend on your current lifestyle. So for those who have jobs, you might, I don't know, you might really enjoy. You might take instead of taking your lunch break, you might look into the market. There are those of you who's not interested in the market at all. You just want to put one position in, maybe a huge 10 lot or 100 lot position, depending on again what you think. So, what are your thoughts? What do you think would be the right time frame for you guys, or what strategy? And for those who are starting off, would you think of what type of strategy you want to try or want to test out? Because right now you want to, if you're starting into the market, get into the market or something, you want to be able to have multiple strategy or be flexible enough to, let's say I have, let's say Thursday had, it was a holiday in your country and you had nothing to do. Instead of watching a series, you'd rather be in the market for a few hours longer than your usual. So being able to move around with various strategies will allow you to uh, maximize whatever profit or whatever uh, targets that you have with regards to trading in the market. Also, also something to consider when trading and when choosing time frames. You also have to consider the fundamentals or how the market moves, because sometimes the market just, even though there's no data or there's no uh, fundamental news or there's no technical reason, sometimes the market just moves based on market sentiment. And when a currency or a pair of currency moves and then the market sentiment moves one way, everybody just follows along or everybody just liquidates their position. Or so sometimes you have to be wary of those type of movements in the market. It's few and rare for those things to happen, but they do happen. So as we always suggest, always use proper risk management and proper planning. For those who do day trading or who prefer shorter time frames, you I guess we are considering not even putting stop loss or take profit position when you for those who are really monitoring the market, but for those who are focusing more of a longer term, so you might want to put in some risk management positions in your trades. Right. Let's see. Tech time frame. Mr. Tech Lab. Right. The best time frame for me, 4 hours, 15 minutes, and entry is my 5 minutes. Okay. Yeah, I can see that Mr. or whoever's in charge of Tech Lab is more of a daily trader or a day trader. Um, yeah. You as an example here, Mr. You can you should you should be able to adjust your strategies and add all multiple time frames together, and then have as much information on every single trade. Sometimes the support and resistance that you have for a daily might adjust if you switch to a H4, or sometimes the 15 minute, or sometimes there are opportunities in the market that from since a longer time frame is like a bird's eye view or a farther view from the market, and the shorter frame is more of a nearer view, a short what do you call this, a shorter view of what's happening. Sometimes you can see opportunities in those small markets, in those small chains, that you won't be able to see in the long term. So very good, Mr. Tech Lab. I agree with your sentiment of using multiple time frames and using it using what works for you. So like I said, it depends on uh, your lifestyle and how you want to strategize, how you want to get into the market, how you want to keep trading into uh, the currency market. Because you might be in a long term position now, but you might find yourself bored and have a few free time, and instead of, again, I would rather be in the market than watch whatever other things that you waste time with. Okay, another thing, by the way, to consider uh, when you use time frames or when you use um, charts, make sure that aside from the time frame that you want to consider, I would like everyone to consider also the amount of position or the amount of lots they're putting in the position. Having a shorter time frame, again, this is highly technical because it depends on the amount of margin that you have or the amount of capital that you have in the market. But if you can manage them properly, make sure you control the number of lots that you have per trade. So maybe we'll discuss it another time, but this is something that I just want everyone to keep on the back of their minds, so that again, we want people to be in the market, continue being part of the market, because uh, it's just a lot better having the opportunity or having the access and being able to have an alternative as a means of making money in the market instead of something else. Instead of doing something else is always a better opportunity than not having another opportunity. So another thing that you might want to consider with regards to trading in various time frame, this one you can do Actually, all of this you can do with trade as with the demo account. So if you have a specific strategy or idea in mind, you might want to do some back testing first. See if this strategy works for a shorter time frame. See if this strategy works in a longer time frame. See if this indicator works in a shorter time frame. See if this indicator works. See if you even like this indicator. See if it's an indicator you see it once and you never want to use it again. So backtesting is actually one of the things that you could or we suggest that you try because it allows you to uh, there's an ex- there's an excitement whenever you try something new with regards to trading, and especially even if you hit like 50% of the with a certain strategy, you can maximize that by controlling the number of lots. So even if the hit rate is 50%, but if you know how to risk manage or if you know how to manage your portfolio, you'll be much better off in the long term. What's happening? So the markets have died down a bit, and there's not a lot of movement at the moment. There's only about less less than 100 less than 100 pips for the past few minutes with regards to the market. So I guess we are able to talk about a few things. If you guys have questions, comments, mm, if you want to share what would you would do with what type of strategies you're thinking about right now. So like I said, personally, I've never tried a really, really far or a really, really long term strategy. Longest position I had was about a couple of months. And one of the things that it's an idea, I haven't applied it yet, but a mentor mentioned that no one ever really loses in the market as long as you have the margin. I mean, it's true in a sense, but it's still not applicable for most people. It's a bit esoteric, that idea. So so later today we'll be looking at what what time wait what time is that? Later today we'll be looking at um, the CPI and the core CPI of the US will be launching. Um, Gold actually has gone up, Mr. Yeah, Mr. Toy. Gold has gone up due to the. I believe there was. I wasn't up during the meeting for FOMC because it was 2 a.m. From where I live. But from what I've gathered is that the sentiment for the meeting earlier this day was very dovish. So a lot of people have been shifting their money into gold. So during these times of uncertainty, since people still aren't sure how how long this current war will affect what's happening here, and it's even the Ukraine war is still ongoing. It's just a lot more uncertainty. So normally people will shift to safe havens. Start of the week it was either gold or the dollar. there was a few shifting ideas. That's why if you look at the chart for the 1 hour chart for gold, there was a lot of ranging positions. But since earlier today, if you look at the gold chart, it started moving up, and we're expecting again, depending on the data later for core CPI, we shall see if the market will be how the market will react. So for the market reaction, so this is for example, for those who are scalpers or those who prefer shorter time frames, you might want to get into be in the market at 8:30 Hong Kong time, 8:30 p.m. Hong Kong time. Make sure that you are monitoring your markets because we are expecting huge movement. Sometimes it moves an hour before, or sometimes the movement is delayed an hour, but usually the market reacts based on the data. So um, for those who are using scalping or a short-term strategy, make sure that you are there tonight. For tomorrow, China will show some. China will have some data, although China yuan isn't a major CFD pair or CFD currency that people are trading most of the time. And so mostly for tomorrow is just some information with regards to uh, the pound, and some information also with regards to what is this, consumer sentiments for the US dollar. So I guess tonight will be the major data for that will set up the rest of the week, and maybe potentially earlier next week. Okay, if opening up for a couple of more questions before we close up. Um, Thank you for those who are still here. Uh, we appreciate every single one of you guys. Thank you also for those who asked some questions: Sir Bill, Mr. Tony, Mr. Muhammad, Mr. Tech Lab, Robin, Tao. Hello. Also, if you have ideas on what you want to discuss for the upcoming weeks, or if there are some technical issues, or if you want specific topics that you want, feel free to let us know. So yeah, markets are not moving at all. Yeah, so after that 1 hour or a few hours of movement, so sometimes the market does something like this where it doesn't. It's whenever there's uncertainty in the market, the market expect the market to range. For those who are into scalping strategies or who are day traders, you might want. There's a lot of opportunities within buying and selling bounce backs during that time. So right now it seems that the market is going that way. Excuse me. Until tonight's US CPI data. All right. Anyway, since we have no more questions, we're done for the day. And if you have, feel free just to contact us here whenever you have other questions. But for now, thank you, and I'll see you again. Bye.